The world of cryptocurrency is one that is honestly growing, and yet growing in ever more complicated manners. The reason for this is that once upon a time, crypto was nothing more than a simple thing that only a few people participated in. That was due to the digital currency seemingly having no value. But as Bitcoin exploded and other cryptos decided to enter the market, there was suddenly a mad dash to try and cash in on it. And bad events have happened as a result. And one country has had enough. Allow us to show you China's ban on crypto and ask, will other countries follow? China's ban. The epicenter of Bitcoin mining has called it quits. On September 24th, China's central bank declared all crypto-related transitions illegal, citing concerns about gambling fraud and money laundering. The move sparked a sharp drop in markets. Some investors raced to dump their holdings, and the price of Bitcoin fell nearly 10% after the announcement, before quickly regaining some lost ground. So, a typical day for Bitcoin. China's crypto crackdown comes as governments around the world, including the US, begin to coalesce their official positions on digital assets and virtual currencies. The Chinese government has long been dubious of cryptocurrency, so the move to ban it outright isn't entirely surprising. But hearing it now happen is making a lot of people wonder what is going to happen next. China's lack of trust in crypto. China has long been crypto skeptical. In 2013, the nation banned Chinese banks from handling Bitcoin. In 2017, China banned initial coin offerings, the crypto version of an initial public offering wherein a cryptocurrency startup sells coins or tokens to raise funds for the venture. The People's Bank of China, which is the country's central bank, designated them an illegal form of fundraising. More recently, China has taken aim at crypto mining operations within its borders. In 2019, China's state planner expressed interest in banning Bitcoin mining. And earlier this year, the Chinese government outlawed crypto mining in various provinces, including the Bitcoin mining epicenter of Sichuan. It's still unclear how the ban will affect eCNY, China's own state-backed digital currency. This last part is important, as Bitcoin mining is one of the biggest parts of crypto right now, and one of the biggest problems with it. We'll explain. Bitcoin mining. Bitcoin mining is the process by which new Bitcoins are entered into circulation, but it is also a critical component of the maintenance and development of the blockchain ledger. It is performed using very sophisticated computers that solve extremely complex computational math problems, which means that not everyone can do Bitcoin mining, which is kind of the point when you think about it. Cryptocurrency mining is painstaking, costly, and only sporadically rewarding. Even with those odds, though, mining has a magnetic appeal for many investors interested in cryptocurrency because of the fact that miners are rewarded for their work with crypto tokens. Plus, there are people who have gotten rich off of mining for Bitcoin, and thus they don't want to miss out on their own opportunity to get rich. So in the minds of many, while hard, it's worth the effort in the long term. As noted, doing this correctly results in being rewarded with Bitcoin. That said, you certainly don't have to be a miner to own cryptocurrency tokens. You can also buy cryptocurrencies using fiat currency. You can trade it on an exchange like Bitstamp using another crypto. As an example, using Ethereum or Neo to buy Bitcoin. You can even earn it by shopping, publishing blog posts on platforms that pay users in cryptocurrency, or even set up interest-earning crypto accounts. An example of a crypto blog platform is Steemit, which is kind of like Medium, except that users can reward bloggers by paying them in a proprietary cryptocurrency called Steem. Steem can then be traded elsewhere for Bitcoin. The Bitcoin reward that miners receive is an incentive that motivates people to assist in the primary purpose of mining, to legitimize and monitor Bitcoin transactions, ensuring their validity. Because these responsibilities are spread among many users all over the world, Bitcoin is a decentralized cryptocurrency, or one that does not rely on any central authority like a central bank or government to oversee its regulation. Now, if you were to stop right here, you might think, okay, so it's a hard process, but it's a legal one, right? And if it's legal, why are so many people up in arms about what is going on with these Bitcoin mines? All valid questions. First off, yes, more times than not, Bitcoin mining is 100% legal. The problem is that legal mines sometimes take things too far, and illegal mines are known to do just about anything in order to get the power they need to fuel their servers and thus get more Bitcoin. And that's bad for a very specific reason. According to the Digiconomist Bitcoin Energy Consumption Index, the cryptocurrency's total carbon footprint is comparable to that of the entire country of Peru, and each individual transaction consumes the same amount of electricity that a single U.S. home uses over the course of 39 days. That will not only get worse, as Bitcoin is designed to require more and more computing power, and in turn, use more electricity for mining over time. That's why China is so adamant about ending Bitcoin mining in their country, because it's polluting, draining a lot of power from their system, and supporting a brand that they have no faith in. China's Bitcoin mining market. Until now, most of the world's crypto mining has taken place in China, with the US in a distant second place. In April 2021, 47% of all crypto mining happened in China, according to the University of Cambridge. In contrast, the US accounted for 16.8% of the world's crypto mining during that same month. In the near term, that will likely change. Even before the official announcement, a crypto mining migration of sorts was already underway. And days after the announcement, authorities in the Chinese province of Inner Mongolia seized over 10,000 computers that were specially customized for crypto mining, as reported by CoinDesk. Following China's official announcement banning digital currency, China FUD began trending on Twitter. Many users were quick to point out that previous Chinese statements about crypto had produced fear, uncertainty, and doubt, but were followed by short-lived downturns and shouldn't be taken too seriously. Indeed, by the following Monday, the price of Bitcoin was roughly the same as before the announcement. China's ban extends to crypto exchanges that do business with Chinese citizens, even if they're located outside of China. Crypto exchanges are now struggling to figure out how to deal with Chinese customers. Coinbase, which is one of the most prominent US-based cryptocurrency exchanges, did not publicly comment on the ban, but investors shunned its debut bond sale in the wake of the announcement. Of course, this isn't the only issue here. The question is how other countries would respond to it. And not surprisingly, the United States was one to be very loud about this in a way you wouldn't expect. Taking over the market. The reason we say that is that many politicians decided to step forward and not only support cryptocurrency, but say that if China bans it, it must be something worth fighting for. Which honestly goes to show that certain politicos don't know what's going on with crypto as a whole. But that's another topic entirely. If the US is able to make more of a stake in crypto as a whole, that could indeed help the market in a certain way. But obviously, given the volatility of the market, that's not a guarantee. And that might be why China is honestly ahead of the game here. Because nothing that crypto does is standard, filled with guarantees, or able to be predicted. The wariness of instability. If you look at humanity as a whole, you'll see certain things coming to life. Not the least of which is that many people prefer order over chaos, stability over instability. Granted, some unpredictability in your life can be a great thing, no doubt. But when it comes to your finances, not so much. Unless the chaos is you getting a massive inheritance or winning the lottery, that is. But with cryptocurrency, the volatile nature of the market, mixed with various other elements like scams, too many altcoins to count, the NFT market, and more, makes everything a bit sketchy. Sure, there are plenty of people who have bet on crypto and won big, but there are others who bet on it and lost, or are still waiting for their big boom like many have promised them. As such, you honestly have to wonder if China is honestly right here in just getting rid of crypto as a whole. It may seem rash, but it technically might be safer for their economy overall. And if other countries get in on this act, it could change the game in a major way. So, What do you think? What do you think of this look at China and their widespread ban of anything crypto? Does it surprise you that they're going this route? Or do you think that this is the first domino to fall in what could be a major impact on the crypto market? Can China reverse this in a way that is meaningful to everyone involved? Let us know in the comments below, and we'll see you next time on the channel.